Hello and namaste. This is Neeraj here once again, and welcome back to my channel Financial Market Analysis Twist by Neeraj Shah. So in today's video, I would like to discuss something regarding the markets, world markets, global markets, be it the US market or the Indian Nifty or Russian market or the European market or the basically Asian markets. So what are the way the things have panned out in last few months? Or particularly in last few days only, say one. So as you know that uh, right in 2 weeks time, you have seen that the things have become much more intense as far as the Ukraine-Russia conflict is going on, and also the recent OPEC decision of cutting, and also the continuous harsh tone of US Fed as far as the interest rate decisions are there, that they will continue to be very strict, or what do you call that, not dovish but hawkish about increasing interest rate, as the jobs data also which came in last week, it was much more, the job creation was much more than the Fed had anticipated, and that's what also it emphasizes, that they will continue to go ahead with the increased interest rate scenario. They will continue to increase it means they will continue to be hawkish, and that has spooked the world market all over, because with the interest rising in a bond yield rising, then the bond prices go down, and definitely the stocks will also follow that, as the capital becomes very expensive for most of the economic activities to undertake, and also because of this generally the conflict between Ukraine and Russia spiraling into the more regions, and encompassing Europe also, and USA also, and spreading to Asia also. You know that the effect of that, as inflation and energy prices again started rising, and if this way continues, you will see that food prices and the shipping logistics also becomes an issue, and that will also add to the cost of overall everything. So that is increasing the inflation, right? So in the background of this scenario, this is just a background I am preparing. In the background of all this, and the recent, the 2 days before that, Ukraine had blasted that Russia's that Crimea bridge, which is the most vital bridge for Russia, and it's also a sign of prestige for Russia. So in view of that, I can see much more intense fight and response from the Russia. You will see in the coming days. Just wait, in next 2-3 weeks, you will see a much more ferocious counter response or the attacks from Russia, and this battle or the conflict will spread to much more wider region in Ukraine, which was only till now it was concentrated to the southeastern part of Ukraine, but I see it spreading towards Kyiv also, the western Ukraine, and it can affect Europe also. So one has to be very careful about this kind of this conflict situation going out of hand. So in view of this, I believe I have done my, I will show you the charts now, that most of the markets, and particularly the tech stocks, the US NASDAQ, or what you call the technology stocks all over the world, IT stocks, are headed for a very sharp downfall. Okay, NASDAQ or USD 100 index, US Tech 100 index it is called. I will show you that it is around 30% fall from the current level I see. Because more the expensive stocks, the more heavy correction will be. Expensive in the sense, not in terms of the money, like $100 or $1,000, it's not called. It's expensive on valuation. So what you call valuation is PE, price to earnings ratio, or EV/EBITDA, those kind of ratio, which will get a price to book value. So these are the expensive stocks, where on these parameters, when we measure those stocks, they become expensive, like price to book value of 7 times, 8 times, 6 times. This is very expensive. In the same way, price to earnings of 25, 30, 40, 50 times, it's damn too expensive. It should be in line with the index price runnings or of that particular stock exchange, what overall price earning ratio of say 17 or 20 maximum, but anything above is very expensive. So let me show you the chart of this US 100 tech stocks. As you can see, this is the US tech 100 index. Okay, you see that overall, I see currently it is around say 11,140, and I have drawn this what do you call a line. Okay, so connecting all the bottoms in the recent 6 months time. So whenever it has touched bottom, so these are the connecting all the bottom lines, and you can see that if you extrapolate that bottom points, it can very well go to 8,544, means 8,500 from the current level. So say 11,000 and 8,500, so almost like 23%. So this is the kind of correction I see in that. And now let us see the main US stock, that USD 500 index. There also you will see not so much, but there also I see around 10% of the correction. Okay, so that is my which I consider to be, just I will show you, just when you, if you will connect it, I am just showing you that. Extrapolate, and it will be say around say around 3,100 or 3,200. So from it's almost like 10 to 12% of the decline in the main index also, USD. Okay, now let's say if you look at this, let's say German Deutsch D40 European stocks, DAX. Okay, if you take that and if you do the same extrapolation, it's around 10%. See, from 12,300 to 11,000. So there also around 10% of the decline, minimum decline you can see. Now let's go to Euro 50, right? The main Euro index. So top 50 companies of the European index. And as you know that most of the world market follow each other. Means if the USA takes the lead, and whatever the how the USA market behaves, according to the world market also gets down. So let's say see. You see, from 3,366 to almost bottom out at 3,079. So another 10% of the decline. So on an average, as you can see, the tech stocks are going for a much more correction of more than 20%. But other stocks are going to be, and in general index is going to be around 10%. And let us look at the Indian Nifty, because my consistent view about Nifty is that I see a heavy correction in Nifty. Around 15,000 or 14,500 is my correction, is my projection, my prediction about Nifty, which I believe it will come back to sooner or later. So just hold on, it is trying to take this Nifty. So this is, I wanted to just discuss a little bit about this. You see, yeah, it came. So let's see here also that my prediction, you can see a lot of times since last 6 months I have been consistently telling that markets are for deep correction, and don't be under impression that markets will will give you a superlative returns. See, as you can see here also, it almost gives you like this 14,300. This is the kind of 14,300, 14,500 is what the market seems to be. The Nifty 50 India's index also, it seems to be. If you take another, tracking this, 14,700 means around between 14,500 to 15,000 seems to be the bottom for the market, and the Nifty can correct to that, because if you look at the Nifty 50 component, so this tech stocks, as I told you, that they will follow this whatever the US Nasdaq USD 100 index follows. So tech stocks are in for a heavy correction, as I can see that 20 to 22%. It looks like that from the current level it can come down. In the same way, if you look at this, Indian market consists of this. If the interest rates goes up, then banking stock also, I believe that they can be for the correction, because bond yields or the held to maturity rises, so that mark to market provision, they have to book much more higher losses for the banks, Indian banks. So that way also it can go for correction. And India doesn't have any energy company, because energy company only ONGC is there, but that also has to bear all the subsidy losses, because India is not increasing the price of the petrol and diesel in line with the market, in line with the current market rates, right? So that is the reason we cannot play on that. And with the inflation and this increasing rates, definitely even your so-called consumption story or the consumer stocks also will take a hit. So overall, you can take the high, you can hide yourself if you want, you are so desperate for investment, you can invest in some FMCG or, that kind of so-called safe stock. But I don't believe in any safe stock, and because safe stocks will anyway not give you return over a long-term period. Because if you in the long-term period, you have to take bets in the energy, commodities. These are the stocks which can give you long-term returns. Okay, so better. The tech stocks definitely will be for a very heavy correction, which I see. You will see that also. So it's better to get out of that. Bank stock also I would not suggest. Whatever is remaining, that you can see that in the component of Nifty in Indian market, you can try to take a bet. But overall scenario is that here Nifty also, it's per my consistent view, is that it may correct to say 15,000. So between 14,500 to 15,000 it may come down to. So that's what overall this world market and the market index, I just wanted to discuss with you my analysis and my projections. That's it from my side, and we'll see you once again next week with some other unique concepts and ideas. Until that time, ciao from Neeraj from Moscow, and love you all. See you.